Okay, so be sure and do the evaluations, feedback for Jordana, and get your note pages out. We're gonna go through a few things, one of which is going to be required on your display. So you may want to take some notes as we go through this. So this week, let's see. Let me see if I can get to the right page. So we're going to talk about understanding some of the accounting and financial, a little bit of what Jordana talked about yesterday, develop some forecasts. One of the key things that isn't up there but is about your startup costs, and so it's the last item. And then how do you go about looking at this from a real business standpoint? So why you should do budgets. Do anyone remember what Jordana said about budgets? Whether they're personal budgets or for your business? It'll probably be on your quiz, so. What did she say about budgets?
Wasn't it like check them?
Pardon me?
Wasn't it like check them, like keep track of them?
Yeah, a little bit. Basically, her emphasis was doing a budget tells your money where it should go, as opposed to having your money telling you. And that's the key thing, is when you budget things, you're directing where your money's gonna go and how you're gonna use your money. So some reasons that you should do budgets. One is to really know your business. You do a budget, you do kind of a forecast, and then you compare your actual results to that, which gives you a sense of, are you going in the direction that you wanted to go, or is something else happening? The other thing with it does is it provides some benchmarks. And when I say a benchmark, what do you think that means? Has anyone heard the term benchmark before? No? Okay, well, benchmarks are when you put something out there and then you compare how you're doing against it. So it provides benchmarks. It tells you that in the month of January, you projected that you're gonna make so much money from sales and you're gonna have certain expenses. So that gives you something to compare to. So it gives you an opportunity to compare to see how your business is doing. The other thing that's really significant with budgets is this uncover bottlenecks. You can find out where you're spending a lot of time or energy on something that's not having a big payoff. So let's talk about this sheet. If you look at all of these displays, they have a section called startup expenses. Because the financials are the hardest part of trying to put together your presentation, what we want from each group is at least having the startup costs. So when you look at the first line item there, it's purchase fixed assets. That's if you have to buy land or a building or equipment, if you have to build a building for your business, that's where those costs would go in that line. The next line is remodeling costs. Virtually everyone, if you're getting an existing building, you're going to have to do some remodeling. It also includes things like signs. Are you going to need signs for your business? If so, that's kind of where that goes. Typically, if you're leasing a business, if you think about going back several weeks, Krista from the meat shop, how long did it take them to get their business ready after they got the lease? It was about 6 months of work before they were able to open, because they had a lot of remodeling and stuff to do. That all costs money. Fees and licenses, we'll talk more about that in a couple of weeks, but if you've got I don't know whether in the tattoo business, whether you have to have a license for it, but for a lot of businesses, things like if you've got a bakery or food that you're providing, you have to have the health department food service license. That all goes in there. Legal fees, typically you're gonna have some legal fees for getting your business started. We'll talk in the next couple of weeks about business structure and kind of which ones are most expensive and which ones are not. Insurance, next week we'll talk a little bit more about insurance, but you're gonna have insurance costs. Then when you open a business, you have labor and training. In other words, before you actually get started, you're gonna do some training of the people that are gonna be working in the business, whether it's yourself or others. Sometimes there's some costs there. If you've got a shoe store, you're gonna have some inventory. So you're gonna have to buy the stuff ahead of time. So how much inventory are you gonna have to buy before you open the door the first day? So supplies, advertising, things of that nature. One of the other things is if you're renting a building and so you're looking at an existing building, you're just gonna rent it, you have a lease, typically you have to pay the first and last month rent. So that goes into your startup cost. So these are all things that you have to identify. Are you gonna have these costs to start your business? And if so, how much? And that's probably the single largest piece of the financials that you have to do. So there's some other things. This is kind of an operating expense budget, and we're not gonna have you do this, but if you've got time, some of the questions you get might be related to this. And so there's some things in there about salaries and wages. Are you gonna have employees? If so, how much are you gonna pay them? As this is an Excel spreadsheet that's in Canvas that you have access to. We've already put some numbers in, some of the things that Jordana talked about yesterday, where it says payroll taxes and whatever the other word, expenses, I don't know what. Anyway, on the sheet you can write, but it's a payroll taxes that you have to pay. So down here at the bottom under the payroll taxes, you've got Social Security, you've got Medicare, you've got workers' compensation, you've got state unemployment. Those are all things that if you have an employee, you have to pay and you have to allocate for. So if you said that let's say you're gonna have someone that you're hiring and they're gonna do, I'm gonna use simple numbers, 10 hours a month, and you're gonna pay them $15 an hour, how much is the labor expense? It's pretty simple math. $10, 10 hours for the month, $15 an hour. $150. So that $150 would go in where it says salaries and wages. It would automatically calculate the 1.29% or 1.22% for your payroll taxes and stuff, so that would calculate for you already. So you can look at your payroll, and this spreadsheet helps work through it. Then there's these other things, such as your non-labor expenses being your rent, your utilities, whether you have ongoing legal or accounting services, your advertising, to give you a sense of, okay, so these are the expense side of the business. The next is, how do you kind of do an estimate of your sales? If you had particular products that you were selling, this is a spreadsheet that you could use. It probably isn't real applicable to most of your businesses, so I'm gonna skip over this one. But basically, it's trying to figure out what's your sales and what's your cost for those sales. So then you kind of put all of this together for your annual budget. And I mean, this is the piece that when you're really doing a business, you need to really stop and look at and think about. So the top line there is sales, and you project what your sales are going to be for each month. So are you gonna sell $1,000 in January and $10,000 in July? Then you look at your cost of goods sold, and you have to estimate those as well. So, as an example with the shoe business, one of the big costs of goods sold is what is it that you're gonna have to pay someone like Nike or Adidas or whoever for the shoes that you're going to get, and what's your sales going to be, and you do that kind of for each month. Then you have your operating expenses being your labor costs, being salary and payroll taxes. And then you have your non-labor expenses, rent. Typically, your rent's gonna be the same every month if you're renting a business. You may be paying $1,000 a month for rent. You may have utilities. You've got water and sewer and electricity. If you have to have internet service. So all of those things have to be part of your cost. Your advertising. You put all those numbers in, it'll help you calculate whether you're gonna make money or lose money. In our business at the coffee shop, we made money May, June, July, August, September. May and September were pretty close to break even, made a little bit. The other months, but January, February, March, April, October, November, December, we didn't make money. It cost us really more to operate than the revenue that we had. Now, part of the reason was we made the conscious decision that we were going to be open certain hours for certain people, and we had to pay our rent during those months. You know, if we closed everything down and didn't operate it, we'd still have to pay rent and utilities and things of that nature. So those are decisions that you have to make, is how much is it going to cost in those months that I might not be making a lot of money. That's what this sheet is really there to help you with. For most of your businesses, this may or may not apply. So as an example, the shoe business certainly applies. Anything where you've got to buy inventory to sell. So in some respects, even the theater and the dinner and theater, a little bit with the fitness center. The way this starts is the first thing that you have to do is purchase your inventory, and you typically purchase the inventory on credit. So that would be purchasing the shoes from Nike or Adidas or whoever you're purchasing them from. Then you have to sell the inventory, and you sell the inventory either cash or credit. You have to collect that money from your customers. That money is then used to pay for the inventory that you previously purchased, and you start that all over again. So as an example, you know, then for some of the other businesses, if you think about the fitness center, how does this apply? Well, you've got to get the equipment and everything there, and you're going to have to spend money on all of that. Then you're going to collect, you sell the inventory. Essentially, the inventory in a fitness center is the hours and time that you have people coming in. You're selling memberships. You have to collect that money from the customer to be able to pay for the equipment and things that you had. This really applies mostly to businesses like a shoe business, but there are aspects of it that apply to every business. So something that you need to think about is when you're doing your startup costs, part of that inventory, the stuff that you have to buy ahead of time is all, up front before you start collecting any money. This sheet, again, is something in most businesses that's very useful, and we use something very much like this with a coffee shop, because you start with your beginning cash balance in January, and in the coffee shop, we typically had we did about roughly $100,000 in sales each year. We had to start the year with about $30,000 because our costs in January, February, March, April, before we started making profits, we would use up the cash that we had in our checking account. Then in May, June, July, and August, and a little bit in September, we would be adding money back into our checking account because we were making more money than we were spending. And then starting in November, we would spend more than we make. So that was why we used something like this to see, okay, what is our sales, our cash receipts going to be? What do we have to pay out for all of these things? Basically, how does that net out every month? And what did we start out with the money? So again, if you're really in business, this becomes a real important piece of understanding, am I gonna have enough money to get through those slow times before I start making money? So, for what you are going to be working on today, tomorrow, and Friday, you can, I would say, really start working on your startup costs. You don't have to have it finalized this week, but start working on your startup costs. You can, for right now, skip the 4 in the middle, the sales forecast, the operating expense, the annual budget, the cash flow projection, and work on designing your display. By Friday, I would like to see something on a piece of paper, sketched out what your display is going to look like, how you're going to do it, and start having all of the headers identified and the text identified. So, what questions do you have about what you need to work on this week?
No questions.
In Canvas is the startup expense, and these others are useful if you, when you're doing your presentation, you may get some questions about your revenues, your expenses, how you're gonna look at it. So these are useful for you, but you don't have to put it on the display, but you do have to have your startup costs on the display. If there's no